Multi-time frame analysis is one of the most commonly used concept of technical analysis, but unfortunately most traders doesn't know how to do it correctly. When most traders want to trade multi-time frame analysis, they end up messing up the charts with a lot of indicators and a lot of lines and boxes and whatever. So in this video, I'm going to show you how to trade multi-time frame analysis in a simple but very effective way. So let me start off by explaining what multi-time frame analysis is. Multi-time frame analysis is the use of different time frames and factors to make better trading decisions. So you're combining different time frames so that you can be able to make better decisions, right? So what are the reasons of using multi-time frame? Number one is multi-time frame can help you to avoid directional bias. What is directional bias? Think about when you see a market which looks like this, right? This market here is a 5-minute time frame volatility 10 index. And when you see this market, you don't really know what type of a trade to buy. Do you need to sell because you see this downtrend, or do you need to buy and continue this uptrend which was created in the first place? At the end of the day, you end up being confused. So what do? You can shift up to higher time frames. For example, this is now the 1 hour time frame, and this zone that you see, the green zone, is the same zone that we were seeing as the 5-minute time frame, right? And now in the higher time frame, you know that the bigger picture of this market is trying to go to the upside because this is in an uptrend, right? And you would see what type of trades to place, right? Number two, you can increase your accuracy with multi-time frame analysis, right? Let me show you an example. Let's say here you wanted to buy here and you buy your trade. You buy here and then you put your take profit above this zone right here, and then now your stop loss right there. But then the market end up doing this and dropping to the downside. What is the reason for this, right? There are many different reasons for the market because the market is always random. But one of the reasons why you might lose this trade is because if you zoom this chart out, you're going to see that our trade is right here. This is our trade. But if you look up on the 1 hour time frame, this trade is here, but we have a very strong level which was going to always react or reject our market, which was almost always going to reject our market. And this level is right here. You can see the market would always come and reject to this zone because here you can see our take profit was way above this zone. But if you were using multi-time frame analysis, you would avoid trading this because you know that there's a level here that might reject the market. All right, now the number two reason is you can use multi-time frame analysis to increase your risk to reward ratio, right? If you think about it, if you were placing a trade on this 4-hour time frame, what type of a trade are you going to place? Let's say you were selling at this point, right? So if you sell here and you target this zone here, where were you going to put your stop loss? Always is gonna be above these previous zones right here, right? And by doing this, you are always going to have a poor risk to reward ratio. But if you zoom this out to a lower time frame, like the 1 hour time frame, this is where our trade was going to be. Maybe after seeing this small channel here and a breakout, this is where our trade is on a higher time frame. But in this case, you are going to see that we were going to say, okay, if we have a major level here at this point, we were likely to get a drop. So this is where we would put our stop loss. So if we have a strong level here, we can always try to be confident and place our stop loss above here because we know that this zone is strong. But we can only see that when we go to the lower time frames. You cannot see that if you are on the higher time frame, as you can see. So doing this on a lower time frame would give you an advantage of getting a big risk to reward ratio. Now, let me show you how to do this, right? So the easiest way of doing multi-time frame is using what is called the top to down analysis. The top to down analysis is simply starting off your analysis on a bigger time frame, right? And then you drop down to a lower time frame. For example, if the bigger time frame is giving you the trend, then the 15-minute time frame so So for example, if your bigger time frame is the 1 hour, you would be looking for the trend of the market using that 1 hour time frame, and then you would shift it to a lower time frame like the 15-minute time frame to get your area of value. And lastly, you go to the 5-minute time frame to get your entries and your entry triggers. Let me give you the first example. If you look at this chart right here, you are going to see that this market is in a 4-hour time frame. And let's take a look at this market here, and then we look at the trend of the market. What is the trend of the market? Here it's clearly that you can see that the market is in a downtrend, right? And if this market is in a downtrend, we are looking for sell trades. That's all what we need with this bigger time frame, right? This is the 4-hour time frame. I'll start on the 4-hour time frame, and then the next thing is we go down to the 1-hour time frame. And what are you doing on the 1-hour time frame? What are you doing on the 1-hour time frame is you are looking for optimum trading zones, right? So what are optimum trading zones? We are talking about things like support and resistance, supply and demand, depending on which type of a trader are you. But those factors that you know that this market is likely to reverse on this zone are our optimum trading zones. In this case, I'm going to be using support and resistance, because if you know me, most of my trades come up with support and resistance. So we have 3 zones here which have been rejecting the market, which is our strong support and resistance zones. And these zones are, from this point you can see the market have been reacting and rejecting on this zone, and also on this zone you can see the market have been rejecting and reacting over and over again on this zone, right? And then we have a bigger zone here which we just mark out in this case, right? So with these zones, what are we going to do with these zones? Now we are on the 1-hour time frame. We looked at the trend on the 4-hour time frame. We drop down to the 1-hour time frame to get support and resistance, and then now we are going to the 15-minute time frame to confirm our entries, right? So if we zoom out this chart and go to the 15-minute time frame, you are going to see that this is the chart that we have. On the 15-minute time frame, you are going to see a very big trend. That's the advantage of doing multi time frame analysis. Now you know clearly that, okay, this is a downtrend and I want to be placing a trade, and this is where the market is at right now. So what is the type of a trade that I can place at this point right here? I'm always going to be looking to sell here because we are in a downtrend, but I cannot just sell without having my confirmation. So that is why I'm here on the 15-minute time frame. So the next thing that I'm gonna look out here, let's zoom out, and then we're going to look at the zone that we are, right? So in this case, on this zone, we are what are the things that we can look for our entries, right? You can see that on this zone we have a double top pattern here. From here, pull back up here, now we have a drop to the downside, right? So this is called a double top pattern, so that you would enter at this point and then you would place your stop loss above there. But this double top might not be very clear enough for you. You can always go further to the lower time frame, like the 5-minute time frame. If I go to the 5-minute time frame now, this is the lowest time frame that you are going to be using, and then on this case you are going to see that our double top is now very clear. We have a double top here, market moves up down like this, and then once this happens, you can see that the market broke out and do a break and retest of the neckline, right? You can see here market goes up, drops, goes up, and now it retests into this zone that is our neckline, and then we can get a very good sell trade that can happen in this case. So you would sell like this and you'd expect prices to drop from your point, right? So if you don't know how to trade chart patterns, you can so if you don't know how to trade chart patterns, the good news is I am creating the improved version of our chart patterns trading guide. So I'll leave you a link in the description where you will get our free chart patterns trading guide. Now you might be thinking, okay, the take profit is very far from my entry. I cannot make money from this, right? And this is what most people who don't trade chart patterns think, who don't trade multi-time frame think of. But if you think about it, this market, this zone is just on this, between these zones on a higher time frame. So this trade is just a very small, and it might need like 2 or 3 candles on the 4-hour time frame for it to be fulfilled. So this trade can be placed and it can make money or lose money in the same day, and you can make 4 or 5 times your risk if you really make good trade. Now, to make sure that you really understand this, I'm gonna give you another example. If you look at this market right here, you are going to see that this is the 5-minute time frame, and from this 5-minute time frame you cannot really see where the market is going and what is going on. But if you want to get a good trade from this, what are you going to do? How are you going to trade this? The first thing that you need to do is you need to look at the higher time frame. For example, this is now the 4-hour time frame. If you look at the 4-hour time frame, you are going to clearly see that the trend is going to the upside. And if the trend is going to the upside, if it is an uptrend, then the chances of us making money is going to be going long or buying this market, right? And if you want to buy this market, how are we going to buy that? First of all, we need to now shift on to a lower time frame, from the 4-hour to a lower time frame. So if you're coming from the lower, we're going to the 1-hour time frame, and if you are going to the 1-hour time frame, you are looking for areas of value. In this case, you're going to see that I've drawn these 2 areas of value. We have this zone where the market have been touching over and over again. Market have been touching here over and over and over and over again. So this is a very strong level that we want to buy it, because we want to go to the upside. So we were waiting for the market to drop to either one of these zones and then we buy, right? Or we'll either wait for it to break above this zone before we buy. But in this case, the best way is to wait for it to come back to any of these zones. Here also you can see we have a zone which have been tested multiple times. So if this zone is tested multiple times, it simply means if the market comes to that zone again, there's chances of that zone holding up again. Now we go down to the 15-minute time frame for our entries, right? If we go down to the 15-minute time frame for our entries, what are we going to do on the 15-minute time frame? The first thing that we are going to be doing is we are going to be waiting for the market to come back into this zone. If the market comes back into this zone, that's when we buy. So we are going to look for something like this, right? So here what we do is, if the market comes back to this zone, before you buy, you want to look for any type of rejections, like long wick candlesticks like this. If you see, most of the time before a market reverses, it creates a long wick candle, a candle with long wicks to the downside here. That shows us that the market is being rejected to go to the upside. And if you look at this, this is gonna be like, okay, this is crazy risky to reward ratio. But if you want to be trading a small account, or if you want to be making big risky to reward ratios, you need to be trading with multiple time frame. Because if you look at this, this might look a lot risky, but if you are going back to the higher time frame, this is our zone and this is our trade. This is how our trade is going to be looking like. So it doesn't take a lot of much time to get to a winning point if you win. And if you do that, you can trade any account, and if you can even grow small account with this technique, because the secret of growing a small account is all about having huge risk to reward ratios. And when you win, you make a lot of money. When you lose, you cut it short, right? So if you want to learn how to grow a small account, make sure you check out the video appearing on the screen. And if you want to learn how to trade forex trading step by step as a beginner, I have a link to get a free course in the description of this video. Thank you for watching, and I will see you in the next one.